It's not going to be long before taxis start flying. Does that mean that there could be an opportunity in this stock to start flying too? Welcome to today's Equity Empire Chart Analysis session. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on flying taxi company Archer Aviation, symbol ACHR. And when we look at the chart, we're simply going to be assessing two things. One, what is the direction of the trend? And two, are there support levels that we can identify for either a quick bounce trade or a lower entry price for a longer term position? So step one, let's assess the trend. So we'll go from high to low, low to high, high to low, and we'll notice that as they're moving from left to right, the highs are moving higher, and also as they're moving from left to right, the lows are also moving higher. So Archer Aviation is in a near-term uptrend, and when we're in an uptrend, we'll simply be looking for support levels for, once again, either a quick bounce trade or a discounted price for a longer-term position. Now, if you want, you could simply place a market order and buy wherever Archer Aviation is trading at any time. But if you want to exercise a little more discipline, like a professional trader, we'll simply be looking for support levels for a pullback. And there is a support level right here in the 1146 to 1083 price range. And there's another support level below that, right down here, in the 1018 to 924 price range. Now let's go up and see if there is resistance, technical resistance in the chart. And yes, our first clue of technical resistance is right up here in the 1321 to 1390 price range. Okay, so here's our game plan. We'd simply be looking for a pullback into one of these support levels for a quick bounce off that level and head to the resistance level. So if you wanted, you can go for an aggressive way to trade this setup would be to place a buy limit order at 1146, protective stop just below the 1083 price point, drag the target just in front of the resistance level, and that trade setup has a 2.58 to 1 reward to risk ratio. So that would, if we bounce off that level, back to 1321. Now, if you want to, if you're looking for a greater reward to risk ratio, or if you think price might pull back more than just 60, 70 cents, if you think there might be a bigger pullback, you could construct the following trade, which is place a buy limit order at 1018, protective stop just below 924, drag the target to the same resistance level. That trade up right there has a reward to risk ratio of a little over 3 to 1. So in other words, for every $100 worth of risk you would take in that trade setup, the reward potential will be a little over $300. So here's the range of scenarios that could potentially happen. One, we could just keep taking off like a flying taxi in the future, and just keep heading higher. In that case, neither one of these support levels, if you're waiting for a pullback, you wouldn't get filled in either one of those support levels. The other situations, maybe we just chop and go sideways and you don't get filled. But once again, if you want to go for the aggressive upper level, that trade ideally would do something like this. Bounce off 1146 and head higher. If you wanted to be a little more patient, a little greater discount and a higher reward to risk ratio, you would want Archer stock to do something like this. Head down to this level, bounce off the 1018 price point, and head higher from there. And then retest that. And once it gets to that price point there, if it does, then you can reassess your target at that point. So, two potential trades, setups for Archer Aviation. Hope you enjoyed today's session, folks. Let's wrap it up. I'll be back each day this week for more chart analysis. In the meantime, wish you the best of luck in your trading and investing,